everybody. This is Ellman, the Blue Collar Investor, and welcome to BCI podcast number 3, titled Converting Non-Dividend Stocks into Dividend Stocks. Now, for those of us who enjoy receiving dividends, frequently there'll be stocks that we like from every perspective, fundamental and technical, but don't generate dividends, and therefore we may have a tendency not to buy these stocks, to ignore them. Well, in today's presentation, we're going to discuss how to use option selling, covered call writing in particular, to simulate these dividends, only having to write 4 covered call trades per year. Now, if we were to have a look at the Dow 30 or blue chip stocks, which do provide dividends, we can actually have a look at the average dividend yield. Now, in this particular screenshot, what we're showing you here are stocks that have made our blue chip report. You could see from July of 2018. And what these stocks have done in our reports is they've outperformed the S&P 500 over 2 time frames, the most recent 3 months and the last 1 year. So all of these stocks have outperformed the S&P 500 on both of those time frames. So they are the best performing Dow 30 stocks at that point in time. And what we did was we indicated in the brown cells over here, we indicated the annualized dividend yield of these top performing Dow 30 stocks. And you could see, for example, Microsoft was yielding 1.65% on an annual basis. But the average of all of these stocks that made our watch list, that particular contract, came out to 1.73%. So let's just round that up to 2%, and let's say that would be our goal, 2% annualized return. Now, if we have a look at Microsoft, which, if you recall, yielded 1.65%, let's say, for example, it didn't yield that, it had no dividend, and we wanted Microsoft, or if we wanted to just double the yield from 1.65 up to, let's say, 4%, we could write 4 covered call trades a year. Now, if we wanted to get an additional 2%, it would be 0.5% 4 times a year, and that would come to the 2% target goal. So at this particular time frame, if you could see here, Microsoft was trading at 107.46. So 1% would be $1.07, 0.5% would be about 53.54 cents. So if we took a look at an option chain and we went out of the money, we see that the $111 strike generated exactly 54 cents. And that would meet our target. We would do a trade like that 4 times a year. So if our goal was 2% for Microsoft, 0.5% per quarter, you could see here that the 54 cents did generate a return of 0.5%, which is what our target was. So all we would have to do then is write 4 covered call trades a year, and that will double our dividend yield. Now let's have a look at a quality security, Micron Technology, ticker symbol MU, which trades on the NASDAQ exchange. And at the time that I made this screenshot, Micron was trading at 53.72. And let's say our target was the 2% that those elite performing Dow 30 stocks would generate. Well, 1% would be 53 cents, 0.5% would be about 27 cents. Now we go to the option chain and we look down the bid column here for something targeting 27 cents. So we have 31, we have 21, nothing exactly 27, but 31 comes the closest. So let's target the $55.50 strike price at 31 cents. So that would be our target. It would come out to a little bit more than what our target goal of 2.0% is, but it would simulate it pretty closely. So if we ran our calculations on Micron using that 31 cents, you could see here that it would generate not 0.5%, but 0.58%, which would annualize out to 2.3%. That's fine if our target goal was 2%. Things don't always work out precisely to the penny. So just to summarize now, uh, we can convert non-dividend stocks to dividend-like stocks with just 4 covered call trades per year by writing an out-of-the-money strike that will generate our target goal. In this case, if we're targeting an annualized return of 2%, it would be a 0.5% 4 times a year. And for stocks that are already distributing dividends, like Microsoft does, we can leverage this strategy to double those yields, again, by writing only 4 trades per calendar year. So there you have it, BCI podcast number 3, converting non-dividend stocks into dividend-like securities. Ladies and gentlemen, I hope you enjoyed this podcast, and most importantly, I hope you make some money from it. As always, this is Ellman, the blue collar investor. Take care, everybody.